Hello, everybody, and welcome to the 58th edition of LM's Weekly Wrap, our weekly program to cover the developments in the market. This week has been quite a decisive week for the markets because we had a lot of result reactions as we come towards the end of the earnings season. At the same time, we had a lot of global developments in the US markets. There's been geopolitical tensions. There's been crude oil prices which have been on the boil. There is the food supply constraints, and a lot of other factors to look forward to. A lot of data to analyze as far as the US markets were concerned, as well as the domestic markets. So with me is Jash. Jash, kindly welcome to the show and kindly take us ahead with your understanding of the developments in the international markets as well as the domestic markets, which will be followed by the sectoral outlook from my side. Thank you.
Thank you, sir. It's great coming back here as usual. And today we've seen, as sir said, that it has been a decisive week. Nifty has been consolidating. It has been moving up and down, but more or less it is stable and on a consolidation level. As I had mentioned last week about the Moody's downgrade for the US economy, that had created a slight downside. There have been three major events globally if we go to see. One is the Moody's downgrade. Second is Fitch giving a downgrade rating to major financial lenders where the costs are high and basically it's going towards some kind of ALM over there. So that is there. And third is the crude. Crude is at $87 a barrel, which is kind of a concern. Whereas yesterday, and the next point is, yesterday the RBI's meeting, they've said that India is going into a golden age era where they will take the world to a next place where we are seeing more and more investments in India. It's becoming a manufacturing hub. Also because of China. China is taking, the global manufacturers are taking China as +1. So that's that is basically helping India grow in the future. And also today morning, if we go to see, China is launching an India dedicated fund, which shows the confidence of the world, including China and India, that India as a country is actually entering a new era. Of course, it is not overnight. It is going to take another 5. It's a decade's financial planning. So everyone knows the FI time and again. They have seen these rallies. I had mentioned this last week as well that we are exactly where China was in 2006 in terms of per capita income. That was $2,000 per capita income. So the FI I have seen it in US, Japan, Korea, South Korea, and China. So now they are seeing in India. So it is nothing new for them. So it's basically where they are going to bet now. That is India. So that is exactly what the RBI's meeting was about yesterday. They're not going to increase the rates because the spike in commodity prices, the tomatoes and the cereal prices that we are seeing is because of erratic rainfall and it's not because of the interest rates up or down. So we can see that stabilizing once the rainfall also stabilizes, the situation normalizes, and it is not going to be controlled by the interest rates being hiked up or cut or any sorts of that. So the RBI doesn't need to hike up interest rate to control the grain prices and the vegetable prices. So that will normalize eventually. That's it on the global front. Also, the geopolitical issues may create issues for India because that is leading to the oil prices being at $87 a barrel. So that's where we need to watch out. So that has to stabilize eventually, and I think that is one of the major concerns for India because we are still oil import driven economy. That's where our forex majorly are deployed. I think apart from that, I don't see a lot of concerns for India right now, and I would like to hand over to Nirav sir for the sectoral and the result outlook. Thank you.
Yeah, thank you, Jash. So as rightly pointed out, that geopolitical tensions are on the boil, and crude is on the boil, and food insecurity, etc. These are the matters which have impacted. But just coming back to our sectoral outlook for the Indian economy, as pointed out yesterday, that India has the potential to become the growth engine of the world, and that's what is being reflected in the numbers which have come from the earnings season. So we start off with the different sectors. First of all, we start off with the auto sector. Auto sector continues to be in great shape, and we've had very good set of numbers, very good commentary coming in from the auto majors, especially the likes of Maruti, Tata Motors, Ashok Leyland, Mahindra and Mahindra in particular, and we've seen all these stocks gain quite well in trade. The commentary has been very strong, and to add to all that, we had the FADA data this week, that is for Federation of Automobile Dealers Association. They have indicated that the retail demand has gone up by around 10% in the month of July, and they have said particularly that two-wheeler is on the comeback trail. The reputable brands are doing quite well. Secondly, three-wheelers has done exceptionally well during the month. There's been a growth of around 74%. And of course, the commercial vehicles and the passenger vehicles continue to do quite well. All the hopes are, of course, now pinned on the festival season ahead. So as the wholesale trade will start stocking up for the festival season from next month onwards. So I think that's the pretty much the story which is coming from the FMCG sector as well. But remaining with the auto sector, we had some important developments this week. Hero MotoCorp was a big gainer. It's on the comeback trail because they've received a very strong response, more than 25,000 bookings for their X440, which is going to be launched in October. So I think the advance bookings have been quite strong. So Hero MotoCorp gaining in trade. The results have been also been fairly good, and we expect a similar type of story to play out in Bajaj Auto as well, because we are expecting the exports to start reviving very soon. At the same time, we are going to see a traction in the domestic markets. Even the three-wheelers seems to be doing very well. So I think we could see a traction in Bajaj Auto as well. Third is Eicher Motors. Eicher Motors continues to do very well. They have a share of around 88% in the mid market segment, and middleweight segment, what is known as, from which ranges from 250cc to 750cc, and they're doing very well on the export front also. The body language is very strong, and their two products, which is Hunter 350 and Super Meteor 650, continue to do very well. So I think the two-wheeler space is really trying to make a comeback. It's in a very sweet spot. As far as the Escorts Kubota is concerned, I think it's likely to do well because the construction equipment space has been doing quite well. The agri components, the agri space, agri equipment is doing quite well. So overall, to sum up, auto is likely to do well. When auto does well, needless to say that auto ancillary could also get the benefits of that. The likes of tires, automotive batteries, etc. are likely to do well. Next, we come to the banking sector. Banking sector we did see good numbers, but I think the best is behind us. And going forward, I think we could see the NIMs moderate. That means the net interest margins could be on the path to moderation. We could see some moderation in the loan growth. We could see some moderation in the advances growth. How the strong pace is likely to moderate a bit. So I think banking is likely to be impacted on account of these factors. Private sector banking could be impacted. Public sector banks, I think, could be the dark horses because there's been severe under ownership in public sector banks, and this under ownership could reflect in the stock prices moving up. So I think PSU banks could be a contrarian bet in the markets at this point of time. Also, we could see some consolidation in the NBFC space going forward. Third is the capital goods. Capital goods continues to do well, and I think certain themes like defense and infrastructure and railways, these themes will continue to do well. We've seen very good numbers coming in from the railway capital goods majors like the Titagar Wagons or RK Forge. Amongst other capital goods space, I think infrastructure taken together, we have L&T which continues to do very well. We've seen very good commentary coming in from Bharat Forge. Bharat Forge, they have indicated that this year is going to be a kind of an inflection point as far as the defense business is concerned. They've indicated that they have very strong inquiries as far as the defense business is concerned, and as far as the defense business is concerned, it's like the end, approaching the end of a very dark tunnel where they've been making huge investments, and now it's the time to reap the benefits of the same. So this year is definitely going to be an inflection point as far as Bharat Forge is concerned. So many more interesting stories, even in the capital goods space. I think today we had numbers from Action Construction Equipment, HBL Power Systems, all very strong set of numbers and strong pedigree over there. As far as the other stocks are concerned, I think this week belonged to the IT sector also. We've seen for the second consecutive week, HCL Technologies, Tech Mahindra continue to do very well in the markets. These were amongst the top gainers in the market. And I think with HCL Technologies having won a big order today, Tech Mahindra also doing quite well in trade. So these are definitely the stocks to look forward to. Apart from this, we've seen very good traction in pharma. So since the last few weeks, we've seen stocks perform exceptionally well in trade, like the stocks like the frontliners, Cipla, Dr. Reddy's, Sun Pharma, Lupin. I think they've performed very well, and I think some doubts which have been put to rest with respect to Cipla. Cipla has stated that promoters have no intention of exiting the company. So clarification to that extent has come, but all these stocks have been doing exceptionally well in trade, and we expect pharma to perform quite well in trade going forward. I think we particularly like stocks like Lupin, Glenmark Pharma, and Biocon and Lotus Labs. These could be the dark horses as far as the markets are concerned. We could see a big jump up in these stocks in the times to come. Apart from this, I think metals has been under some pressure because of the China-related developments. We've seen China-related factors impacting the metals, and metals largely has been under pressure after having run up for a brief while. Finally, we come to oil and gas. I think oil and gas sector continues to do well. Reliance Industries doing well, and with the jump in the crude oil prices, I think can expect the upstream oil companies, ONGC and Oil India, etc., to do well, apart from Reliance Industries. And expect certain sectors which are dependent on crude oil, like tires, paints, chemicals, etc., could be under some sort of pressure on account of these developments. FMCG sector, I think, has been largely quiet, and I think, as indicated by the FMCG sector, that moderating input costs, with input costs now moderating, the competitive intensity has begun to go up. We are seeing the advertisement intensity also go up. That means the media intensity as well as the competitive intensity, it has gone up quite sharply. So I think FMCG companies are likely to be under some sort of pressure, at least in the near term. Many things to discuss, especially with respect to results, but of course time constraints are there, so we leave all those things for the next session. I hope you liked our commentary of the markets. Do write back to us with your feedback on the program, and for the closing comments, I hand over to Jash.
Thank you, sir. It was a very insightful session indeed, and I would like you to like, share and subscribe to have timely updates on the session. Thank you.
Thank you.